Well, it happened again, guys. Donald Trump announced he will basically do tariffs on the EU and then swiftly after announces he will pause the threatened 50% tariffs on Europe after a constructive call with EU chief. Now, why do I say this kind of unsurprisingly? Well, if you go back and watch what we discussed on Friday, that's exactly what we talked about. This is the Trump playbook. And again, I've said this many times on my channel, but whether you like or dislike Donald Trump, it should be left to the side for a second when we're talking about the markets. The reason I bring that up is because this has been a repeated theme where the market hears Trump say something and they absolutely panic. And most of the time, it has been the case that he's not fully meaning what he's saying in terms of it's the art of the deal, right? It's negotiation. He will come in swinging hot and then he'll let off the gas, right? Come in swinging hot, let off the gas. And what's interesting here is that if you're somebody who has been watching the show, watching my live streams or my videos, then you know I'm taking these opportunities, these dips, as buying opportunities for this very reason. I think that Trump's negotiation tactics are very scary to many people, but once you understand Trump, once you get to know kind of his dealings, which I think the market is starting to figure out, you're starting to see what happens, right? The market freaks out, bounces back, freaks out, bounces back. And so this little EU kind of, this little ploy, this little thing that happened over the weekend was almost something that we expected here on the channel. And I encourage you to go back and watch my videos to where exactly I talked about that. On Friday or Thursday, I actually ended up getting long the Russell 2000 index, which if we pull up the Russell here, we've got a nice little bounce back already starting to form. Price came down into a level of support that I liked, bounced really sharply off of that, and I went and got long the Russell with a stop below structure. Now, of course, I could still be wrong about this, and something could change to where relations do actually worsen between the EU and the United States. But I think that this is something that, again, if you're panicking and living under a rock, these sort of events are causing you to sell the market and get scared. But that has been consistently the wrong decision to make when we look at indices, right? Indices are almost back to their all-time highs. Take a look at the NASDAQ. We are 4 or 5% off of our all-time highs. The S&P 500 is 4% off of its all-time highs. Again, if you panicked and freaked out because of your political viewpoints, you lost big. Now, you might say, well, Nick, are you some big Trumpy here? No, that's not what I'm saying at all. People did this under Biden too, but this is a consistent mistake that market participants make, right? So in 2022, people absolutely panicked thinking that Biden was going to cause inflation to go into hyperinflation and cause the world to melt down. And meanwhile, smart, not leveraged to the tippy top investors were actually able to take advantage of some great dip buying opportunities and catch a really nice move higher. So the reason I'm saying this is because, again, whether you lean one way or the other doesn't matter for trading, right? If you're going to talk about trading, people overreact, they freak out to these sorts of events, and I think there's actually some really good opportunities in the mix of them. So when it comes to the edge finder, right, when we actually just pay attention to the data, I want to show you something that I found. I was looking at the historical scoring. We've pretty much been bullish going as far back as April, but we could go further, and let's say we go from, let's go even February of 2025, and just take a look at the score here. So you can see that the NASDAQ's score got as bullish as March 24th. That's the first time that we crossed into bullish territory. We did go back into neutral territory and then peaked up into bullish territory again on the Edge Finder on April 15th. Let's take those 2 days, March 24th and April 15th, as bullish signals from the Edge Finder on the NASDAQ. And you can see what happened in terms of the price action here right around this time. That was obviously a little bit early to the call, but check out this consistent bullishness that we've seen, and the NASDAQ has performed very, very well. So we've got the price chart up top. We've got the score from the Edge Finder down here. The reason I'm showing you that is because, again, I do find it very important that the signals or the biases produced by the Edge Finder are marrying up nicely with the trends that are starting to form in markets. So we can see that in the NASDAQ. We can also see that if we go, we've got this since February. Gold took a really good run to the upside, and that ended up being a really good call from the Edge Finder, where it first got bullish around early February, pretty much consistently stayed bullish until late April, and then you can see it's kind of lost its score. And meanwhile, gold has kind of gone sideways since. Just wanted to show that. It's a new feature that I worked on this weekend and was proud of sharing, or wanted to share what I had worked on here. But if you are interested in exploring the Edge Finder, by the way, there are trial links in the description down below if that's something that you would like to explore in more detail. Speaking of gold, again, still kind of range bound. I actually did a chart markup in our Telegram channel today, which is also linked in the description. So we have this kind of downward structure in the 4-hour chart that you're looking at. So, this channel has been in play. And again, with the EU-US kind of pause that we got announced today, you do see gold kind of rolling over around this 33.50 level. I would not be surprised. We may go back and test this 34.20 or even the previous all-time high around 34.80. But in my personal opinion, the bias for gold, as it is described in the Edge Finder at currently getting neutral readings, right? You're in neutral territory, you're not bullish, not bearish, based on the economic data, sentiment data, and price action. Basically, we're getting a neutral reading. So for me, what this would mean is that these extremes, I would be more hesitant, thinking that we would reverse from these highs. And if we were to see, moves lower, I would be more thinking that you're going to probably get some reaction. So still neutral. I think we're most likely to stay range bound on the price of gold. Also on the daily chart, you do have a really solid upward trend, but that does not mean that we can't go into consolidation for a few months while we wait. So again, I think that the driver here is going to be trade negotiations breaking down. That would cause price to go up, and trade relations improving would cause prices to go down. I think that's why when you had the big sell-off in April in U.S. stock market and global stock markets, gold ripped so hard was because you had this uncertainty around how trade was going to go. Since then, we've got a lot more willingness by both sides, it seems, to negotiate, right? China came to the table. The U.S. Is enacting pauses on tariff negotiations. So these things are making the market a little bit more relaxed, right? That's why we're seeing NASDAQ, S&P, these things back towards those all-time highs. Why did I choose the Russell? Well, it was a bullish setup on the Edge Finder, but also I like the idea of having a potential comeback trade. I mean, this thing is still very far off of its all-time highs. You're talking about a 20% move just to get back to where we were before all of this craziness. The Russell has gotten hit really hard, and I think momentum is really shifting to the bulls here, and I do think that there's an opportunity to play a little catch-up on the Russell, so I'm doing that. I've got a good position on there so far. We'll see how that trade goes from here. Taking a quick look at the US dollar. But before I do, let me just remind you guys, if you're not in our Telegram channel, completely free to join. Here is the QR code to join the Telegram channel if that's easier for you. If you're watching on a TV or a device where it's just easier to scan the QR code. I just created those, or I asked someone on my team to make those for us just to make it convenient for TV viewers. I watch YouTube on TV, and I find it really convenient when people have QR codes. So I was like, I saw somebody else do that. I was like, that's really convenient. But inside of the Telegram channel, completely free to join. We are posting up chart markups. I did a markup on gold this morning, just this 4-hour chart. So if you don't have, 30 minutes a day to watch YouTube, or you would just like to get some sneak previews of things that I'm looking at in the Telegram channel, we always post up stuff throughout the day. And starting in June, we have another analyst joining our community, and I'm really excited about it. He's going to be sharing some chart markups. We got a sneak preview somewhere. Here it is. Alan's charts. So you're going to get the white charts and the dark charts. So should be a nice little mix of analysis. He's primarily a Forex trader. I am primarily index and commodities, but I also do trade Forex. So a little bit of everything. Speaking of Forex, dollar index. And by the way, like I said, link is also in the description or in the pinned comment below if you would like to join the free-to-join Telegram channel. We're also doing some giveaways. Last thing on the Telegram, we're going to be giving away a gold VIP membership, which will unlock all of our signals for free for a lifetime amount of time, so pretty much forever. If you'd like to get access to that, enter for a chance to win using the Telegram channel. We'll be dropping a link to that shortly. Okay, so dollar index downtrend is still in control here, right? We are back towards these lows here, and so I think that dollar downside, personally, I do think it's actually kind of limited. Now, I'm not saying I'm going heavy long the U.S. dollar per se, but if I just pull up our economic heat map for a second, we look at U.S. economic data. Let's see what we get here. So if I'm looking at the U.S. economic heat map, we've got our gauge here, our USD impact based on all this economic data sitting at a 46% rank. That's just saying that we have a mixed view. We have some things that are bearish for the dollar, some things that are bullish for the dollar. PMIs have been strong, retail sales have been strong, but then you had inflation data that came in soft, right? So mixed sentiment for the dollar index. So as we do squeeze lower here, I do tend to think that this has run a good bit of its course. I don't see the dollar dramatically weakening further from here, and I also don't see it dramatically strengthening from here until you get more of a decisive economic read here. Let's say, for example, that inflation ticks into, higher than expected inflation and the Fed can't cut rates this year. Then you're talking about a bullish US dollar scenario for me personally. But I do heavily, decide my bias on currencies or commodities or indices, all based on the economic data. It's very, very important to get the big picture story. And right now, the big picture story, I would say, is pretty mixed. A lot of times this thing is all red or all blue. But right now, very, very checkerboarded, right? Very mixed, back and forth. So not a very clear black and white idea of which direction I think the dollar is going to go in. So that leans me back to what I said about gold earlier, right? I think that resistance here should kind of generally hold. And I do think that this lower end of the spectrum is more likely to hold as support. Does that mean it has to? Does that mean it's guaranteed? No, I'm not very convicted one way or the other. So we could see price continue to go down, or we could get a reversal. But I'm personally not going to be trading that until we get some more decisive price action. Let's go to our top setups here for a second. I just want to see what we're working with today. And what I'm going to do is I'm going to filter out the neutral readings just to see what we've got on the radar. So actually what I can do is I can pull up the top setup simple page. It looks, in my opinion, a little bit easier to read while I'm doing videos, as I know a lot of you guys watch on mobile devices. This just makes it, the bigger text makes it a little easier to read. On the bearish side, I've got currency pairs like Euro Pound, Aussie Kiwi, Euro Kiwi. So I like all these setups. Like I'd be willing to short these setups if we got some interesting moves. So I'll show you Euro Pound, for example, and what I'd be looking for. So I use a really simple indicator that we have at A1. It's called the A1 extension zones. I wait for this thing to get more extreme to one side. So I'd be looking for a rally higher in the Euro Pound in order to get short. If I'm taking a look at something like Aussie Kiwi or Euro Kiwi, so if I'm looking at AUD NZD, I did have a short position on this one. Wish I had kept it, but I took a profit just at this moving average, but I'd be interested if we can get a push back up into this area to potentially get short again. Euro NZD, so if I pull this currency pair up, again, waiting for some overextension to the upside before jumping in. By the way, this indicator can be picked up on our website. We have a ton of different tools. We're a software company that builds all sorts of different stuff, like obviously the Edge Finder, and we also build some indicators for TradingView. Head over to indicators, and you can grab those for yourself on our website. That's a1trading.com, and then under indicators or Edge Finder, whatever you want to explore, you can get trials or whatever you want. So, anyways, just following through here on this list. I think you guys already heard me kind of talk about my indices perspective. I do like most of the U.S. indices. I've already got a Russell position, but willing to watch these other ones for further dips to possibly add some interesting setups there. I'm watching copper, platinum. If I'm taking a look at other currency pairs, pound yen and pound Swiss look really interesting. Let's pull up pound Swiss, for example. So if I'm looking at pound Swiss, so what I like here, right, is if we just take a look at price action, you had this big drop, then the bounce back, right? So this was all the tariff concerns and global trade war stuff, but now we seem to be kind of in this grinding back mode, right? So if we do get tests into this area again, that could be an area where I look to start a bullish position on the British pound against the Swiss franc. I do heavily favor the long side on this one based on the Edge Finder scoring here. I'm also long dollar yen currently. This is a trade that's not going super well for me, but it is a tiny position. I posted a video on Saturday of my trading strategy in Forex, which is pretty much focused on mean reversion, dollar cost averaging, and it is not necessarily a strictly, trend following with a tight stop loss trailing stop method, which many traders who watch my channel are familiar with my style of trading. With Forex, I'm much more dollar cost averaging focused. So I have a long position on the dollar yen. I'd be interested, and by the way, you can find that video on my channel if you just want to search it up, and I posted a couple days ago, so just look for my Forex trading strategy if you want to watch that video. I'd be interested if we get a little squeeze lower. Definitely interested in adding a second position to my dollar yen, bringing my cost basis down around to this area would be great. In which case, maybe I still think that we are likely to see a bounce back in the dollar yen over some time, as I am pretty bearish the Japanese yen. If we take a look at our economic surprise meters, let's see if this will load for us here today. So what we see here is that our strongest currencies in terms of surprise. So you can pause the video if you'd like to and take a closer look at this. But basically, a higher score indicates that the majority of key economic metrics, right, GDP numbers, PMIs, CPIs, have been strong relative to forecasts for the currency. A lower reading suggests that majority of key economic metrics have been missing expectations, which would suggest bearishness for the currency. So if I'm looking at this list, right, our bearish lists of currencies are the Japanese yen, the euro, and that is it of the majors, right? I kind of leave these ones out personally because I don't usually trade that list of currencies. But in terms of other currencies, let's take a look here. Bullish currencies, talking about the Kiwi dollar. We're looking at the British pound, pound sterling, and then the Australian dollar is also poking into bullish territory as well. So that's pretty much how I'm going to focus my Forex attention is going to be shorting things like Japanese yen, shorting things like euro, long things like British pound and Kiwi dollar and Aussie dollar. So I use this pretty much every day on the FX side of my trading to look for strong versus weak currencies. This is not based on price action. This is based on economic data, which I find to be way more valuable than price action. Nothing against price action, but economic data, in my opinion, tells a story that leads it ultimately. Again, differing opinions out there, but that is what has kind of gotten to me where I'm at, which is focusing very heavily on economic data rather than trying to stare at price action and find the perfect entries. I use a good mix of kind of fundamental analysis. Also, indices continuing to push higher here today. Take a look at the NASDAQ up 1.6%. By the way, Edgefinder, if you are interested in getting Edgefinder, I want to tell you a little bit about today's sponsor. Well, it's not Vantage, but I want to tell you about another one that we have. So let me show you this. So if I can show you 8cap, sorry, I have no editor today. It's a U.S. holiday. If you want to get access to a free copy of the Edgefinder, check out 8cap. So here's the link to go to that. I'm going to show you that right now. So if you head over to our website and type a1trading.com/8cap, do that really quick. And then what you can see here is that we actually offer a way to get the Edgefinder completely for free if you make certain deposit tiers. So like if you deposit $10,000 with 8cap, if you are doing that anyways, like a lot of traders have 10K plus to trade with. Not everybody does. I understand that. But if you do, there are some nice perks that you can take advantage of. You can get access to our gold VIP membership for free. Same with the Edgefinder. So if you go up to 15,000, you can pretty much get everything we have completely for free. 8cap essentially pays for it for you. They purchase it on your behalf if you make these deposits. All the conditions can be found on this website page. Again, just head over to a1trading.com/8cap. And you can also explore Vantage if you'd like, but 8cap is today's video sponsor. So definitely check them out if you are looking for a great brokerage and some free products to go with it. Hope this video was helpful to you. Trade safe, guys. We'll see you in the next one.